Well, if I only get to hold one, if that's the box you're putting me in, then Bitcoin, Bitcoin, Bitcoin. The reason for that is that I have every confidence that Bitcoin will win the digital gold store of value monetary asset space. I think that game is over and Bitcoin has won it and will just extend its lead. If you get into these other areas like ETH versus Sol, versus Avalanche versus whoever else you might want to name, I just have less confidence on who will be the winner. So if I had to pick one, I might pick the wrong one. If you let me pick multiple of those, I might be happy to do it. But since the question is just one asset, Bitcoin's the one where it's not going to face competition for the market it's going after. These other markets, even Chainlink in the Oracle space, those markets are newer and more competitive. There's more competitive threat. And so the way to invest in markets where there's more competition is, in my view, not to try to pick the winner, but to buy the whole bunch. Right. So that's what I would do in that space. So if it's only one asset, it's Bitcoin, Bitcoin, Bitcoin.
Matt Hougan opens with a clear and pragmatic insight. The financial world is changing faster than most investors realize. Traditional markets, once considered stable and predictable, are now shaped by rising debt, persistent inflation, and growing uncertainty around government policy. Stocks, bonds, and cash no longer offer the same protection they once did. In this environment, doing nothing has quietly become a risk of its own. Investors are being forced to rethink where they store value and how they protect their future. This isn't about hype or conjecture, according to Hougan. It has to do with adjustment, because digital assets, particularly Bitcoin, address actual structural issues in the traditional system. They are becoming a new cornerstone of contemporary portfolios, not because they are fads. The credibility and independence that traditional finance increasingly lacks are provided by scarcity, decentralization, and transparency. Crypto is becoming more mainstream as organizations start to notice this change.
Bitcoin is 10% of the global store of value market today. That market is Bitcoin and gold. So Bitcoin is 10% of that market. If we look over the last 20 years, the size of the gold market has risen by 10x. Gold is a 10x from 2005. If that happens again, 20 years from now, gold is another 10x. The store of value market is another 10x. And Bitcoin is still just 10% of the market. Every Bitcoin's worth $1 million. That's literally all that needs to happen. I also think Bitcoin's going to steal market share from gold for that growing market. So right now it's about 10%. Could it get to 25% in 10 years? Could it get to 50% of that market? I think it's better than gold at most of the things gold does. And if it gets to 20%, Bitcoin's price doubles. If the size of the market 10x's and Bitcoin steals its share, you're talking about Bitcoin being in many millions of dollars. And I think that's actually the most likely scenario. Just to hit one more point on that, all you have to believe for that to be true is for what's happened for the last 10 years to continue happening for the next 10, which is the store value market growing as people worry about the dollar and Bitcoin taking an increasing share. It's been taking share for the last 10 years. You just have to assume those trends continue and you get Bitcoin in millions of dollars. Yeah,
exactly.
All you need to get to that number is for the store of value market to 10x again. As I discussed, it 10x'd over the last 20 years. All you're expecting is that process to continue, right? It will 10x again. And you expect Bitcoin to come to be roughly as large as gold. If those two things happen, you end up with $6+ million Bitcoin. That's not a big jump. You're not suggesting a huge difference. You're just suggesting what's been happening will continue to happen for another 20 years.
How could you be wrong on that?
Well, you could be wrong on it in two ways. Obviously, so you have two bets. You could be wrong on each of those bets. Gold could not cede market share to Bitcoin. Now that runs against most of history. Like most of modern history is digital things stealing market share from physical things. But you could be wrong on that. Gold could vacuum up all of that opportunity. Or you could have the store value market not continue to grow. And the primary reason for that is if governments stopped printing debt and printing money. I'm just very skeptical. I don't see.
How is that possible?
It's impossible.
It's impossible.
It seems to be impossible. It seems to be impossible. It's not impossible. You see it in some places. We've seen it in Argentina recently, right? They went on a true austerity bent. It's not impossible. But it looks impossible in the current system where the impetus just seems to be spending more money. And that's part of the reason you want to do this. And what if I'm wrong by half? What if it gets to 3 million and it's a 30x? That's actually not so bad either. The same reason people are buying gold are the reason they're buying Bitcoin, which is they no longer trust the fiat system. They want some of their money in a different form of money that's not controlled by the state and that they can hold on a self-sovereign basis. The people who believe that in gold right now primarily are central banks. The people who believe that in Bitcoin right now are primarily individuals and wealth advisors and some institutions. But ultimately, it's the same trade. It's that most people's economic lives have 100% exposure to the fiat system. Does that make sense? Or do you want 1, 2, 3, 4, 5% exposure to something else, whether it's gold or Bitcoin or a combination of both? It's just a prudent diversification.
How do people who don't hold these assets survive or live and buy their matcha in 20 years?
Yeah, it's a great question. I mean, to go back to those two bets, you can think of those two bets as different. The store of value market increasing, that's a mix of wealth building, but also a lot of just matching those returns. The real wealth building increment is Bitcoin taking share from gold. That's one of the reasons actually I love Bitcoin more than gold in a portfolio, because to get to your point, you said, why 5%? 5% Bitcoin, because it's getting those two boosts at once, can serve the need. Whereas 5% gold will probably just, help you keep pace, right? With that portion of your portfolio, won't lose its purchasing power. So they are very different investments.
Hougan explains that institutional investors naturally understand stablecoins and tokenization because they fit neatly into the existing financial system. Unlike Bitcoin, which often requires investors to rethink how money itself works, tokenization feels familiar. It mirrors the way traditional markets already operate. This is where Solana stands out. Its positioning as a platform for internet-based capital markets makes immediate sense to institutions. Stocks, bonds, revenue streams, and settlement systems are concepts they already work with every day. As Solana ETFs launch and more institutions receive approval to invest, capital could flow in quickly. That demand may rise much faster than the available supply, creating strong upward pressure on price. Hougan describes Solana's current setup as one of the most compelling he has seen in the crypto space. Limited supply, rapidly growing demand, powerful new use cases, and an enormous market still waiting to be tapped.
Well, if I only get to hold one, if that's the box you're putting me in, then Bitcoin, Bitcoin, Bitcoin. The reason for that is that I have every confidence that Bitcoin will win the digital gold store of value monetary asset space. I think that game is over and Bitcoin has won it and it will just extend its lead. If you get into these other areas like ETH versus Sol, versus Avalanche versus whoever else you might want to name, I just have less confidence on who will be the winner. So if I had to pick one, I might pick the wrong one. If you let me pick multiple of those, I might be happy to do it. But since the question is just one asset, Bitcoin's the one where it's not going to face competition for the market it's going after. These other markets, even Chainlink in the Oracle space, those markets are newer and more competitive. There's more competitive threat. And so the way to invest in markets where there's more competition is, in my view, not to try to pick the winner, but to buy the whole bunch. Right. So that's what I would do in that space. So if it's only one asset, it's Bitcoin, Bitcoin, Bitcoin. So to take the tokenization and stablecoin market, I'm not the only one who thinks that's a good bet. Right. The US Secretary of Treasury expects the stablecoin market to 12x over the next 4 years. The CEO of BlackRock, the world's largest asset manager, says every asset, every fund, ETF, stock, bond, real estate will be tokenized. Who am I to disagree with the Secretary of the Treasury or Larry Fink? I think they're probably right. So I feel very good that the tokenization market will grow 100x over the next handful of years, and the stablecoin market will grow 10 to 20x over the next few years. That's consensus. And then the second bet that Solana will take a growing share of that. Look, Solana is a challenger in these markets. Ethereum's the dominant asset. I love Ethereum. It has the lion's share of the stablecoin market. It is the leading play on tokenization, but Solana is a legit competitor with an interesting technological differentiation. And importantly to me, it's extraordinarily easy to use. And the community has a ship first attitude. And you can see it winning an increasing number of mandates. So it's behind ETH. I'm not saying it's going to catch up or match it, but I think it's going to rise up and be the legitimate competitor in this space, and we'll see how it sorts out. Right now, it's a tiny share of the market, and it's also a very small asset. It's like $100 billion asset. It's 1/5 the size of ETH. How often do you talk about Solana versus Ethereum? Do you do 5-to-1 ETH to Solana?
Probably much more, yeah.
Probably much more even.
Probably much more. You talk much more about Solana than ETH.
You may talk more about Solana and ETH, and yet it's so small. Like, I think
Why?
it's newer. It was outside of the regulatory perimeter under the previous SEC. So if you were an institution building in the stablecoin and tokenization market during the Gensler era, your only choice was ETH. You couldn't build on Solana. It might be a security. It might be illegal. You wouldn't build there. That's only been released for a year now. So when it's newer and it had this regulatory cloud that's been released, of course it's going to be smaller, but it's catching up. Again, I'm not sure it will catch all the way up. Doesn't have to. If it doubled versus ETH and the stablecoin market doubled, it's up 4x. That's a pretty good return. Those seem like very reasonable bets that the stablecoin and tokenization market will double and that Solana relative to ETH could double as well. And that's a 4x if both of those happen. Those seem like good bets. Yeah, so for what it's worth, I'm bullish on the set of them. And the way that I personally invest is to own all of them. What do I specifically like about the Solana setup? I think ease of use is a killer app that's underrated by investors. Investors like to talk about throughput and they like to talk,
TPS, which is
TPS.
This is the kind of word that I actually hate on this podcast.
Of course.
Every time I'm here, what is this? Explain to your mom. Transaction per second. Who cares about this?
No one cares. And even something like centralization, which is really important, that is an important philosophical difference. It has long-term meaning in the world. But for an end user who's trading, who's on-ramping, ease of use is the killer app. And Solana is just easy to use, just dead easy to use. The more centralized element versus the diversified L2 infrastructure or even subchains makes it just very easy to use. And I think the market overlooks that. So one of the reasons I'm so bullish on it is I think the market isn't looking at one of its killer features, which I think will cause it to win an increasing share of the market. And I also think it's been sort of labeled with this meme coin only overhang because it was the center of that activity. And the history of technology suggests that even if sort of jokes and fun things happen first on a network platform, that doesn't mean it doesn't develop into something very serious as well. So I think there may be a behavioral dismissal of Solana by some in the sort of traditional community that causes them to overlook it. And anytime you have those behavioral mistakes, and I'm seeing two in Sol, the meme coin thing, and then ignoring ease of use, that's sort of alpha in the market.
One of the most important points Hougan makes is that investors often focus on the wrong metrics. They obsess over technical jargon like transactions per second or abstract debates about decentralization, while overlooking what actually matters to users. Ease of use, he argues, is the real killer feature. Solana is simply easier to use than most competing blockchains, and that matters far more for traders, developers, and institutions than theoretical performance statistics. He also believes Solana has been unfairly dismissed as a meme-coin chain, even though history shows that many serious technologies first gained traction through experimentation and entertainment before becoming critical infrastructure. From an institutional perspective, Solana's story is especially compelling. Bitcoin can be difficult for traditional investors to grasp conceptually, but stablecoins and tokenization sit squarely within their existing framework. Revenues, settlements, stocks, bonds, and dollar-denominated assets are familiar territory. Solana, positioning itself as an internet capital markets platform, makes the story simple and intuitive. Add in the fact that Solana is still a relatively small asset with limited supply, and even modest ETF inflows could have an outsized impact on price. This combination, constrained supply, rising institutional demand, and powerful long-term narratives, is why Hougan describes Solana as one of the strongest setups he has ever seen in crypto.